And welcome back to the Mountain Morning Show with me, CEO of FuturesANIMal, Travis R. McGhee.
Joe, how are you?
I'm good. How are you?
I'm good.
I know you're looking forward to Christmas.
I am. I broke out the Christmas socks today.
Yeah, you sure did. They're looking great.
I'm feeling great.
I don't have anything like that. Where do you get them?
I have no idea. My wife got them for me and said that I needed to kind of spice things up on TV a little bit.
It beats the heck out of an ugly sweater. Yeah, you did good.
I love it. Yeah.
I've got to find something like that. I'm gonna go shopping today. You got me excited.
Yeah, I know.
But you know, a lot of people are out shopping, and you know what they've been shopping for this year and have done pretty well in? Stocks.
Stocks, yeah, it's been phenomenal this year.
Yeah.
Yeah, I think, with yesterday's rally, the Dow Jones was up, over 100 points yesterday, which was a little shocking. When we talked about this last week, I didn't think we would see such a big move ahead of what is tomorrow's, for those who don't know, extraordinarily huge announcement out of the Federal Reserve. And I don't know how big it is. I mean, not that it really matters,
right?
But everybody seems to be watching this to see what the Federal Reserve is going to do regarding the stimulus program that they've had in place since 2009.
It would be interesting to see if they figure. I mean, there's so many. This is almost like like being an armchair quarterback on this one, right?
Yeah.
We kind of deciding what makes sense. If they take the chance because we're in Christmas and people are spending, that now is a good time to announce it because maybe it won't affect the market much, or whether they think it will and they're afraid to do it, and so we just let things continue until January.
It's such a tough area when you're dealing with the Fed because there's a lot of secrecy around it, and there's supposed to be independent from political organizations and the market and just be their own entity, but there's a guessing game going around right now, and the reason that it impacts and why it's important to everyday investors like myself and you and the folks watching is because the decision that they make, while yes it will impact the market, and the market may go up, the market may go down, depending on what they say they're going to do. It's also going to impact interest rates.
Yeah.
And we saw that back in May, where a lot of folks were caught off guard when Ben Bernanke came out and said, listen, we've had this stimulus program in place since 2009. Right. I think we're going to start scaling back on it sometime soon. He didn't say when, but he said sometime soon. And you just saw interest rates go through the roof. 30-year mortgages were up well over 4% when they were down around 3.5% at one point in time. The 10-year Treasury was up over 1%. It was an extraordinary move for interest rates. So it certainly impacts the everyday investor. Absolutely.
It seems a little like telling your kids, to put it in a holiday frame of mind, it's really telling your kids you're about to call Santa. We're not, we might call Santa if you keep this up. It's kind of that. It's just enough of a fear factor right there to make people do stuff.
Right.
And it seems like that's kind of the issue.
Yeah. And the important thing is, an
overreaction.
Don't
sometimes.
Overreact. Don't get. It's nothing to be scared of. And in fact, it's actually a good thing if you think about it, because the whole premise that the Federal Reserve was going to stop the stimulus program should allude to the fact that we're on much stronger footing as an economy. That was the whole point of the stimulus program, was really to drive people into the stock market from 2009, when we were going through certainly a rough patch. And looking at us now, a few years later, you would think, okay, well, we're doing much better, the economy's much better, so we don't need that stimulus anymore. Right. Let's start pulling that back and get to a more normalized level.
We have to get used to the idea that the market always moves the opposite direction of the news at the beginning. So we hear good news, the market moves down. If we hear bad news, the market moves up, and that only lasts for a day or so. Things start to normalize, right? Or typically.
Yeah, and that was the crazy part is...
and that's just because people are so used in the market, or so used to the fact they know that the federal government's going to step in.
Yeah, it's a really crazy market right now, and you've seen this since May. Again, everything right now is speculation. It's the larger trading groups, the larger institutions trying to jockey for position about what the Fed's going to do. So you're exactly right. We would have bad news on the economy come out, and it makes no sense in the world. The market would go up. Well, why is that? Well, the bad news means that, in theory, the Fed is going to continue pumping money
Right.
into the economy. So the market likes it. It's crazy, but you're starting to see that change
patterns
now,
moving.
and you saw it yesterday, where we had good news come out yesterday. Industrial production numbers were up, and we had some other data that shows the economy growing, and the market was up,
Right.
which is, in theory, is where you should be.
And saying that there's more consistency to that, because we've seen a lot of numbers that are up, which I think,
Right.
we see a lot of leading economic indicators that are going the same direction. Suddenly the market starts to go with it as opposed to going against it, which takes us to an interesting point. In the past, one of the things that was the safest, easiest thing to get into was, a bond or to a CD or something like that, and they have not been big performers.
Right.
We assume that they will be again at some point. They'll start to perform reasonably well. But right now, stocks still outperforming them.
Well, stocks are, certainly this year. I mean, you have a stock market that's up over 25% on the year. Bonds, again, with the rise in interest rates that we saw in May, have absolutely been massacred, to put it for light of a better term there. It's been horrific what some folks have seen in their quarterly statements since May with bond funds.
Yeah.
It's just mass liquidation out
Didn't
there
matter
right
how
now.
much the discount was at the outset, you're getting
It's
killed.
just, you have to understand exactly what you're getting into. And you have to understand, yes, while bonds have historically been a very conservative investment, when interest rates are abnormally low and you're getting into a bond fund and interest rates start to rise, that bond fund that you're in loses value. So
Yeah.
yes, you can lose money on a bond or a bond fund if you're not intending on holding it to maturity, if you're going to get out of it early.
That's particularly risky in an environment where we are now, where interest rates
Absolutely.
are so low to begin with. Isn't it?
Exactly. It's very risky. And a lot of people out there, saw this coming, and they've been saying that. And they've been saying, hey, be very weary if we get to a point where the Federal Reserve says, you know what, we're going to start scaling back on our programs. They were worried that bond funds, in turn, would turn upside down, and a lot of people would get hurt on them. So you have seen a lot of mass liquidation out of bonds, certainly out of CDs and so on and so forth, because they're yielding next to nothing, and into stocks, because it's the only place people can find a return on their investment.
Where should we be looking when we talk about that? I mean, obviously, I think you're right. When we start looking at some of the stocks that we might want to go to, what are we looking
I'm a
for?
big fan, especially now, especially those folks who are just getting started, of look at the big blue chip stocks.
Okay.
Big blue chip names like GE,
Coca-Cola.
Boeing, some of the other names that are solid companies, strong companies, big companies, that also pay a nice dividend. And that dividend can serve as a supplement to that yield you might see on a CD or anything like that. A lot of these companies are paying 3% dividends on an annual basis.
Do you just reinvest that typically?
It varies from person to person. Some people take that and they might find other opportunities, but a lot of people do what's called a drip and reinvest dividends into the same stock that they're getting paid the dividend on. But those are good alternatives, looking for stuff like that. And that's all stuff you could talk with your financial advisor about, talk with us about, areas you can find that income generation or that yield that you can't find, in a savings account or a CD right now, to where you're actually doing yourself more harm than you're doing yourself good.
We're running out of time, so I want to ask one more important question here. As we look at that, with the market being strong in, obviously in stocks specifically, what things should we do risk-wise here? What should we be thinking of as the new year starts?
So that's a good point. And just like we've talked about with folks,
Because we could just jump in. I
yeah.
mean, we could just throw in a lot of money, but
with the new year coming, I want folks to do this. With the new year coming, we all make New Year's resolutions, whether it's to gym, whether it's eating healthy, whether it's being a better husband, whatever your New Year's resolution is. I want folks to look at it as, okay, this year I'm going to be a better investor. I'm going to manage my money more efficiently and learn to mitigate risk. So I want folks to take a step to learn how to manage risk inside of their portfolio versus either A, not getting started in the market at all because it's at all-time highs, I don't want to get in right here, or selling everything because we're at all-time highs and then going straight to cash. Instead of doing something like that, learn how to manage the risk inside of your portfolio so that you stay involved in the market rather than just sitting in cash, which is certainly doing yourself no good other than preserving your principal and your capital. You're certainly not earning anything. So, learn how to manage that risk versus just completely removing yourself.
So my director and I are both involved in this a little bit, and it brings up another thing that I know some people are looking at probably doing at the beginning of the year, and that may be to get involved in Bitcoin a little bit. So we had some question about this because the Feds actually sat down with Bitcoin and started talking to them about the legitimacy of it and whether or not it should be considered a something that can be gone right back and forth between the dollar and the coin. What do you see in the validity of Bitcoin and the future of it? Have you any thoughts there at all?
I don't have a whole heck of a lot of thought. I'm not as well versed in it as a lot of folks, although I've certainly been watching it. It's just phenomenal, the price action and the value of it and how it's just skyrocketed over the past year or so. There is certainly a debate right now about the legitimacy. You had a company, Fidelity, who many people know. They either trade there or have some of their mutual funds, so on and so forth. They were actually considering and had approved it to where Bitcoins could be held inside of an IRA at Fidelity.
Right.
But then they turned around the exact same day and said, you know what, we're scratching that.
Wow.
Yeah, so there's certainly a movement around the validity of it and being able to hold it in certain investment vehicles. I just don't know when we're going to get there.
The interesting thing I think that might be something to consider if you're thinking about getting into Bitcoin. The one thought is that a big part of why the Feds are looking to legitimize this currency or make it a currency, so to speak, is because of the fear that there's so much of it that's being used illegally.
Yeah.
It's a great place to launder money, apparently.
Well, yeah, so, there's certainly that.
And that's always a risk, I think,
yeah,
too.
certainly that.
Something to think about.
It's going to be interesting.
It is indeed. All right. Well, we appreciate you giving us a little insight on that, too, because we were kind of interested that way. Travis and McGhee, FuturesANIMal, always fun. Have a Merry Christmas. I know you're going home for Christmas.
I am.
Have a great time at home.
You as well. Yeah. You as well. And I look forward to seeing everybody back again on New Year's Eve. New Year's Eve.
I'm excited. We'll talk all about what to do for the beginning of the year.
All righty.
All right. When we come back, we've got Snow Basin on the line and more after these messages.